Welcome to the StockMentor.com studios. Here in the Black Hills of South Dakota, I'm your Stock Mentor, Brian Johnson. A couple wild days here to begin the week. Today was very not so wild. Very sideways today. Overall, markets were down, I guess, still on average of about 0.5%. But the truth is, the movement really wasn't there. It was up, it was down, it was up, it was down, and that was basically your day. So overall, not a lot of decent trading to be done when all the smoke cleared. That was all done kind of in the first couple of days. You can see it from the chart here in front of us. So starting out here on Monday, we had these two really nice days of movement, with, of course, Tuesday being just especially strong. This broke up and above that 13,000 mark. One of the areas I was talking to you about last week for overhead. This was a major level to get back up and over, not only from a technical perspective, but from a mental perspective. It's that whole 13,000. Ooh, wow, 13,000. We broke it. So, as it is right now, breaks back below it could have kind of the opposite reaction. Could change sentiment back to a little bit more on a bearish side. So I'm going to tell you to really watch carefully this 13,000 level. If you want to look at trades, or you want to maybe cover some long positions that you've been following or in, or whatever the case might be, as the Dow breaks that 13,000, somewhere down in the 12,750 mark, sorry, 12,975 mark, my bad. Those will be the areas that you'll really want to focus hard on over the next couple of days. Options expiration week, which is what we're in, is typically very volatile. We'll get a few days of this run to the upside and a few days of this run to the downside, or vice versa, or something to that effect. And we've seen the hard push to the upside. Will we get that final or some, not final push, but will we get some sort of a hard push now to the downside? It's very possible. Why? Because we're in what would be a bear flag here. This is a nice, neat looking little move to the upside, makes a beautiful little channel, but overall, it could be, and we don't know yet, a little early, but could be just a bear flag in through here. That's why this 13,000, this 12,950-ish level are very strong areas to be watching over the next couple days, especially in the Dow. I'll give you the levels now for the rest of the markets as we get to them, but just keep this in mind. Good strong moves over the last couple days, and now today just kind of a consolidation day as it wanders its way backwards. Stuck now between the 20 and the 50-day moving averages. That 50-day is just above that 13,000 mark, giving more credence to the fact that you need to be watching very carefully that 13,000 mark on any push downwards. I've broken all the indices out to kind of show you where we're at bigger picture. In the bigger scheme of things, we're really trapped. We're trapped between the 12.7 and the 13.3 mark. It's a 600-point range ever since we kind of got into it back here in about February, January-February timeframe. Really, the markets haven't made much progress since then. We did very well in January, even from the very first day. But since we've hit this February mark, not so much. We've been up to here, we've been back down to here. So now we're in this chop sideways. So for those of you that like to look at things on the bigger picture, this is what you'll be focusing on, are the extreme lines here. The one in the middle just kind of gives you a ballpark feel for what the median is. You can see we've been stuck here, back through it here, back up to it here. 13,000, gee, go figure, is a major area to be watching going forward. NASDAQ, NDX anyway, the NASDAQ 100 strongest is the NDX, is the one I like to follow the most. You can see it pulling back as well. Now this one giving us a bit of a different look at the present time, and that is this 60-minute look is very much bull flaggish, meaning that we have to be looking at maybe some bull movement coming into potentially the end of the week. And I'll tell you what's been leading it is Apple. It struck, what was it, 570 or so just the other day, and quickly ran its way back up into 620 today before pulling back. So nothing like $50 in 2 days on a stock to make you smile. So if you caught any of that, good for you. We were definitely watching that and playing that. And subscribers in the trading room and stuff like that. So we were definitely watching for that. going forward, and Apple really gave us a beautiful bounce. They report the 22nd, so be very, very cautious what you do between now and then, and I would never, ever, ever do I recommend you hold over earnings. It's just too risky, especially from what we've seen. Look at what has transpired so far. You get Google reporting, and it drops hard. The banks reported, J.P. Morgan and Goldman Sachs, no, not Goldman Sachs, Wells Fargo, J.P. Morgan and Wells Fargo reported, and their numbers were okay. They weren't devastating, but drop and drop hard. We saw, I think, QCOM or something maybe did the same thing tonight. Anyway, the point is, these stocks are not doing well. I don't know if they're overvaluated at the present time. Based on what we've seen over the past few months. But the point of the matter is a lot of these stocks are reporting well and falling short. Will Apple do that? It doesn't typically do that, but it's just not worth the chance. So be very careful when it comes to holding over earnings. All right, so as it is, here's your extreme. 2,800, 2,660, with the middle being right around 2,740, 2,750. These are all of your levels to watch going forward if you want to play the NASDAQ long or short. From a daily perspective, same thing. That 2740 is also the 20-day moving average. So 20-day and 50-day are my bigger targets to watch for. Breaks above or below those can give you some opportunity for longer shorts. From a weekly perspective, huge move to the downside. This was a red weekly candle. I know we don't see very many of them, but this one is red. And now look, what was a red candle again this week has now quickly come all the way back to cover that ground. So we'll see how the week finishes out. We'll give this till Friday. Don't like to get too far into it until Friday gets here. But as you can see, major movement going on for the week, both up and down in the markets. However, overall, we've dojied out. We haven't moved too far if you go back to the actual open. For the week, though, up 17 points, which is decent, but not like nothing major like what we've seen over the past few weeks. SPX 60 minute. Now the Dow has come all the way back up into this area, and now it's falling backwards. The SPX never made it. It got stuck very nicely below the 50 and the 200 period moving averages here on the 60-minute chart. This is really, really, really a pretty look right in through here. Is it a correction? Could be. We don't know yet, but as we've seen in the Dow anyway, it's a bear flag. So for the time being, it's a bear flag. Your levels to really watch carefully here going forward on the SPX itself, you'll see that it's stuck between the 20 and the 50, are above the 20, which is right around that 1400 area, and back below the 50. I would give this some space, 1375, 1370, somewhere down in there. Those are your areas to look at going forward. Heavy bearish sentiment comes into the market, guys. I'm really targeting this lower line down here on the SPX, which is, maybe what, 1340, 1320, something to that effect. I'd be watching that very closely. The VIX is hanging out and around the 19 mark, still shows complacency, but on the upper end of that complacency side. As you can see here, the 20 mark has held very, very, very well in the past, and 15 to 20 is my complacency mark. Okay, but breaks of that 20 mark can change things very, very quickly from a what feels like now maybe a little bit more bullish scenario this week to a very, very bearish scenario. Looking for that VIX to get up and above, and more importantly, close above the 20 area. And then you need to start being very cautious about the bull side of things. As the fear comes into the markets, that usually means the markets are dropping or about to drop. So watch that very closely. FAS and a nice, what would be a rising wedge here. Had some levels to kind of be watching on this particular monster. But as you can see, big moves up, big moves down. This has been much, much, much better meant for day trading. Day trading, not swing trading, day trading. So watch this monster going forward, that's fine, but you really need to be more conscious from a day trader's perspective of this beast than a swing trader. It's very difficult to swing trader right now because of the volatility. Hanging out right in and around that 100 mark. So we start to break 100 and get down in 99, 98. That would be an opportunity to be looking at maybe some shorting. To the upside, I don't know. I'd be very cautious here, especially with this 200. So I'm not going to give you a long idea in the FAS. That'll be up to you. But from a short perspective, down below that 99, I really like that. That's also going to be right in the area of the 50-day moving average, which is ultimately what I'm aiming for. That's right around 98.50 right now. So those will be the areas to be watching, as it also is trapped between the 20 and the 50. FAZ then, of course, in kind of the opposite type look, which is a falling wedge, which is bullish overall. I really like this one back up and above 23. We can get that thing back above 23 for the more conservative. But you can see it is also trapped between the 20 and the 50. If you want to wait, I'm still very adamant about waiting until we hit about 25 or 27 to really look to go long this thing on a more permanent basis. So for those of you that like to get in and stay in and swing trade or investment trade this thing, you want to be waiting for these more major breaks to happen before you really start jumping in. Otherwise, the 20 and the 50 make very, very good levels to look for long and or short positions. Or that 23 that I gave you is another really nice position. If you're just going to get in and stay in for a few hours, maybe by the end of the day be out, that's great. But this is what you're looking at going forward. From a bigger time perspective, you want to wait for the more major breaks here. Okay, that wraps it up for the video today, guys. I'll let you go. I'll try to be back with you either tomorrow or even Friday. I might do a Friday wrap-up because I didn't get to you yesterday. Was very busy after the markets closed doing some other more personal stuff, so I wasn't able to get a video done for you. But I will sincerely try to get one more out for you this week. If you enjoy the video, sign up for the subscription. Just to your right, click the little link. Takes you right to PayPal, and $28 a month. By the way, you don't have to use PayPal. If you want to write me, I'm more than happy to do credit cards over the phone, or you can write me a check. Some people send me checks for their subscriptions. That works great for me too. I have no problem with that. If you want to do it that way, that's great. So lots of different options open there. If you want to try that subscribers section, by all means, let me know. And we have the trading room, and we still have the mentoring. The mentoring has really been gaining a lot of steam lately coming into the spring. Everybody wants to prepare after seeing this large drop to the downside. A lot of people are trying to prepare for, how do I play the short side? How do I know when to get in? How do I know when to get out? We're very sideways right now. So if you're getting your hand slapped, if you're getting killed in the markets, if you're like, well, I was doing really well since the beginning of the year, and now I don't know exactly what's going on, there's a reason for that. The markets aren't moving in a more consistent basis like they have been over the last quite a few months, since December at least, where it was just go long and you made money type thing. Now we're in a situation where you really do kind of have to know what you're doing to make any money in the markets. You've got to have a good education behind you, and there's never a bad time to get an education. I mean, it doesn't matter if you're 50 or 15 or whatever. Education is great, and if it'll help you in something that you enjoy doing, for instance trading, then why not do it? If you're just in it for the gambling aspect of it, then take your money and go to Vegas. It'd be a heck of a lot more fun. You get the nightlife, you get the boogie. It's just a better way to blow your money because you can rationalize it then. You don't feel quite so bad if you go to Vegas and lose a few $1,000s. But when you're doing it in the markets, it can be devastating. So you're well worth it to go ahead and invest in an education and use that education for the rest of your life, basically, to help you become a better trader and to try to make some money in these markets. So contact me about that if you're interested, and I can get you all the other information on it. We can get you started and get you going. All right, guys, take it easy. See you later. Bye.